So in this video I'm going to be showing you my 90% backtesting model that I wish I knew when I was a beginner, okay? Because when you come into Forex, everyone needs to know the best strategy. You spend time trying to find a strategy, trying to find what works for you. And it is quite hard to find something that's actually simple to learn, but does end up making you profitable. So this is one of the easiest models that I've found. After years and years of trying to find something, this is the only model that I've found that does work, and is fairly simple to understand as long as you know the basics. So I've got a trade example here, which is one of the live trades that took on Friday. It's on the gold charts. So I normally trade gold or NASDAQ. So we'll get into it now. So as you can see here, we're currently ranging on the 2-minute time frame, just in this small range. Okay, so it's essentially, I need an accumulation of price, and then it needs to manipulate, and then we get the inversion fair value gap. That's my entry. So if I play the price out now, you can see that we're sitting in this range, and I'm just waiting for manipulation. So we can either manipulate to the upside and sweep buy side, or we can manipulate down and then we can look for buyers. But the reason I'm looking for a sell is because on the 15-minute time frame and the overall daily trend, we're bearish. Okay, so just for this strategy, I'm only looking for sells. So you can get your daily bias or your bias for the certain time of day or the session, and then that's what you can use as your bias. So simply we're bearish, so I'm only looking for sells. So what I want to see here is a manipulation up, okay, to sweep some buy side, and then a continuation down, and that's what happens. So the levels of liquidity we're targeting, you've got this level, okay, and then if we do end up sweeping sell side, you've got the bottom of the range, which is there. Okay, so let's just play price through. So as you can see, we're manipulating out of the range. Okay, we get manipulation out of the range and we sweep buy side liquidity. So this then becomes buy side's been swept. So now this is what we want to see. We want to see now an entry down, okay, to sweep sell side, because we're in a downtrend as well. We're looking for a move back down. Now what's important as well is above here on the 3-minute time frame, we've actually got a bearish fair value gap. Okay, so not only have we swept buy side, but we tapped into a bearish fair value gap. So that's another confirmation that you can look for sells. Okay, and now what's the most important thing is the entry. So my entry model is based on a fair value gap. Okay, now what you're normally going to think here, and most 90% of people are going to be looking for long positions. So 90% of people are going to be looking for a buy. Okay, bounce off this fair value gap and look for a long. That's where you're going wrong. Okay, that's where this strategy is different from the others. So what I'm looking here is for an inversion. So what that's telling me is that the buying pressure, okay, from this manipulation was actually a manipulation, and it wasn't a market structure shift or breaker structure, whatever you want to call it. So if this gets inversed, that's telling me that the buying pressure isn't holding up, and we're going to look for a move lower. And especially when you've got equal lows, and the bottom of a consolidation, and we're in a downtrend, okay, so it's all leaning towards sells. So now what I'm doing is, I'm bearing in mind we're in a bearish fair value gap, so that's one thing. Secondly, we've got this fair value gap that I'm waiting to be inversed. And then our targets are going to be these equal lows at the bottom of the range. Okay, so it's almost like a power of 3, but not quite the same, because the entry model is different. So as you can see, we come down, tap into the bullish fair value gap, and we get a bounce. So what this is a buying trap. So this is a buyer's trap. So people are now going to be opening long positions. People are now going to be opening long positions here, with the stop loss just below, or the stop loss down here, anywhere it may be, and they're going to be targeting these highs. Now, if you'd have done that before, that's where you're going wrong, and that's why you're losing your trades, because we're in a downtrend, we're reacting from a bearish fair value gap, and we've had a manipulation out and swept buy side. So to me now, I'm only looking for sells. So what I wait and do, I wait for an inverse fair value gap. So there we go, we get the inverse. So this now means to me that I'm entering a short position because we've inversed a bullish fair value gap. My stop loss is going to be above the candle that inversed, and we're simply just going to target the bottom of the range or any kind of sell side liquidity. So equal lows or a big swing point in the market. If you look to the left, there isn't really much we can target. There's not any big pivot points or anything like that. So we'll just go for this for now. It's a 2.5 risk to reward. It's like 26 pips with a 10 pip stop loss. And we'll play price out. So there we go, full TP gets set. Okay, that's the first trade example on this video. There's going to be another example now that I'm going to show you. It's the same concept. We're looking for an inversion fair value gap. Okay, following in line with the trend and targeting either equal lows or a strong pivot point. So let's get into the trade. Okay, so for this trade example, we're on NAS. Okay, we're on the NAS 100. I showed you a gold example last time. We're going to do one on NAS now. So again, okay, I'm marking out my range. Marking out my 2 points, so my buy side and my sell side that I'm looking to be swept. Okay, we're currently just in a ranging market, price moving pretty sideways, nothing much is happening. So until we get a sweep of one on the other side, then we can look for a reversal using inverse fair value gap. So I'll just play price through now and see which side we sweep first. So at this point I'm neutral, okay, it just depends which side I'm going. So it looks like we're going to sweep sell side. Okay, and we do. We get a super sell side. So, now in this leg down of this sell side liquidity, again, we're looking for fair value gaps. So, firstly, I can see this one. Okay, there's a bearish fair value gap there, and then we've also got another one, which is the most important one, which I'm interested in now, is because this is the fair value gap that led to the sweep. This one didn't cause the sweep. It was this one. Okay, because there was another pullback, and then this leg down is the one that caused it. So the fair value gap you're interested in is always the one that was in the leg that swept, the actual liquidity. I know this is in the entire leg, but overall, this is the one that actually swept it. So I'm interested in this. I hope you understand that. You know, because you get all these pullbacks, but this price is important for me. It's the one that sweeps the liquidity. So here, although we're in a bigger leg that's coming down, that's the main one I'm looking at. So when that gets inversed, that's then telling me that this was actually a liquidity sweep and we're not going to go any lower. That's if it does get inversed. So again, the same situation. What people are going to be doing here is classing this as a breaker structure. Okay, they're going to think this is a breaker structure. We're going to go a bit more down. Okay, tap into this fair value gap and then they're going to go for lower. But that's where, again, you're going wrong. You need to be waiting for the inverse, okay? Because this is just a liquidity sweep. It's not a breaker structure. So what I then do is, you know, so again, you get a candle that pushes down. That's gonna trap people. We start reversing back up, which is what I want to see. So this is where people now are going to be shorting. Okay, on that candle, that bearish candle. Now people are going to be shorting. So again, it's just adding more liquidity above. So I'm going to keep playing price through. Okay, so this candle here, we get the inversion. Okay, so most of these people now that were shorting from this bearish fair value gap have probably been stopped out already. Or if they aren't, their stop losses are going to be above this wick. Okay, so their stop loss is going to be above this wick, like I said. So what we're waiting for is them to be swept out, and then we're probably going to target this next bearish fair value gap. So that's our next target. So then what we can do, you know, you can expect price to take out this internal liquidity and then take out this. Once we reach this point, we're probably going to go break even, okay, and secure some profits, because that is the next swing point in the down leg. So we're going to mark that as TP. That is going to be the liquidity level, okay, where the stop loss is going to be sitting, and then the final TP is going to be the top of the range. Okay, so we'll mark them out now, and we'll get our long position. Okay, so we're going to be targeting buy side liquidity, which is the top of the range. My stop loss is going to be the candle below. And let's just see how the trade plays. So it's a 4.4 risk to reward. Okay, so it's a good risk to reward trade. So yeah, let's just get into the trade. Okay, so at this point now, like I said, we came up and perfectly tapped into this bearish fair value gap and saw a rejection. So again, this is adding more liquidity to the fact we're in an overall move of sweeping bar side. So again, these people here that are shorting, where are their stop losses sitting? It's going to be above this wick. Okay, all these people that are entering a short position here are going to get stopped out again because their stop losses will be there. I can guarantee it. But they don't realise that down here we've already swept sell side. So there's no why would we come back down and sweep sell side again? There's no reason to sweep sell side twice. Okay, we've already swept it. There's no need to come back down. We're going to take some bar side now. So we're going to take those out of the market. And when I see this, this is where the discipline comes in. You aren't panicking at this point and thinking you're going to get stopped out, because I know that there's more liquidity above now, because there's even more sellers in the market. Never mind all these, we've had sellers here. So I'm remaining patient, and then we get a nice bounce up. Okay, we came back to the original inversion fair value gap, tapped back into it perfectly, and saw a reaction. And then there we go, the full TP does get hit. Okay, we take out the top of the range and the bar side liquidity, and like it really is that simple. Just look for a sweep of either bar side or sell side and a reversal. Okay, it's really that simple. Okay, so that is the end of my first YouTube video and my first trading recap video that I've ever done on this channel. So if you don't mind just liking and subscribing, okay, I'm going to be posting even more videos and more trading recaps so you can learn my strategy and follow me along my journey.